Welcome to the Art of Money podcast with Art McPherson.
Appreciate you listening to the Art of Money with Art McPherson, all powered by the McPherson Financial Group. 321-425-8550. Meet the team, see all the services, schedule that complimentary consultation online at artofmoneyradio.com. And when we say meet the team, that includes the in-house CPA at the McPherson Financial Group, Mark Bernard, who's joining us this weekend. Mark, how you doing?
Doing well. How about you, Mark?
Man, things are great. So for our audience that we're into Thanksgiving, we're into November now, thinking about Thanksgiving, thinking about the holidays. We're going to roll the calendar over here into 2023 before too long. What should we be doing right now regarding our tax strategies?
Well, Mark, for our clients, we are actually looking at what their 2022 taxable income is going to be. We're projecting, we're doing pro forma returns, and we're seeing, should you be doing Roth conversions? Should you be considering IRA contributions? Is there any other types of events that are calendar year focused that we should be taking advantage of before we hit December 31st?
Okay, because there's always options out there for your strategies when it comes to your taxes. And Mark Bernard, one of the reasons you're joining us here this weekend here on The Art of Money is because there are possibilities to reduce your Part B premiums if you're planning on retiring in 2023. Tell me more about that.
Yeah, so for most of our folks that are either getting ready to be on Medicare or are on Medicare, there's an adjustment that Medicare charges for your Part B premium. It's called IRMA, Income Related Monthly Adjustment Amount. And what they do is they look at your taxable income on your return 2 years prior. So for folks that are getting ready to jump on to Medicare in 2023, they look at your 2021 tax return and they look at your adjusted gross income, and that amount determines what your premium is going to be. So for example, for people that are married filing jointly, if their tax or their adjusted gross income is over $182,000 in 2021, they are going to pay an additional premium for their Part B supplemental coverage. Now, what we are looking at for a lot of our folks is there are people that worked in 2021, retired in 2022 or 2023. So when they get to 2023, their income levels are less than what it was in 2021 because they retired, let's say. So there is a form that the Social Security Administration, SSA-44, that lets you talk about life-changing events. And one of those life-changing events is work reduction or work stoppage. And what that does is you can file this form with the Social Security Administration and say, I'm no longer making my $150,000 salary, so paying that extra premium for your Part B should be reduced because I had a life-changing event.
And how much are the Part B premiums, Mark?
So it depends on whether you're single, married, filing jointly, and such. But the minimum is $177 per month, and it goes up basically $70 a month up to $542 a month.
So that can make a huge difference.
Correct.
So, Mark, you mentioned work stoppage. I mean, could that include like COVID-related or an at-work injury? Give me an example of what that means.
It's very broadly defined. So it could be retire. It could be laid off. It could be I've taken another job that I'm making less money.
And if someone's listening this weekend and they say, you know what, this is going to affect me and my retirement plans in 2023, and we call the McPherson Financial Group and we say, you know, I heard Mark Bernard talking about IRMA. What is the best way to sit down with you? What do we need to tell the operator so that we can make sure we can cover this in the IRMA, how we can reduce Part B? What are we asking for?
I would need to see what your 2021 tax return looks like, and then we would have to have a discussion or an interview where I can see what the life-changing events are. And then, of course, we only do this for our clients.
Very good. So the question being, the best way to become a client, give the team a call, 321-425-8550. That's how you reach out to Mark Bernard, Art McPherson, the entire team of the McPherson Financial Group. And Art, this is all part of the strategy that you put together for your clients.
Exactly. So anything that Mark can find that is a benefit to our clients where we can reduce their taxes. In this situation, it's reducing how much is deducted from their Social Security for their Medicare premiums. And when you're talking about $174 being kind of the minimum premium all the way up to over $500 a month, I'd much rather pay the $174, not the $500. So if we have a life-changing event that can adjust that and you don't know about it, if you don't file the form, you're going to pay the higher amount. So there's a lot of people that are probably paying the higher amount that don't have to, because this is not a publicized form. So it's something Mark found. And when you find information like that, we pass along to our clients. We're also doing a public awareness today on the radio. So we just want people to know about the form when you can possibly out there save some money, and it can be a 2-year difference for you, or maybe 3 or 4.
And this is something that the team at the McPherson Financial Group is offering to their clients. And if you have a financial advisor and they don't call you up and they say, hey, man, we have some strategies here that could help you out, well, there's nothing wrong with getting that second opinion from Art McPherson, Mark Bernard, and the team. 321-425-8550, artofmoneyradio.com. Mark Bernard, I know you're busy this weekend. Hey, thanks so much for jumping on and helping out the community this weekend.
I appreciate the time, Art.
Luke McCarty joining us now here on the Art of Money. How you doing this weekend?
I'm doing good. Thanks for having me. Hopefully Mark did well.
He did great. Big proud moment for you.
Sure he did.
He did great. You know, we talked about this going into that last break, that the Federal Reserve gave us its 4th straight interest rate hike at 75 basis points, with all indications are it won't stop with the increases until inflation is tamed. Now, add to that, holiday layoffs are starting to happen. Lyft, the rideshare service, cutting 13% of their staff. Meta, Robinhood, Twitter, Coinbase, they've all announced upcoming layoffs. Even Amazon, which feels like the giant is untouchable, they're in a hiring freeze right now. So Art McPherson, Luke McCarty, what happens if we feel like that we're going to get futured endeavored?
Yeah, unfortunately, right now what's happening, there are quite a bit of layoffs. It's more in the technology industry. And so, you know, there's companies like Meta, or Facebook is what we all like to call it, right? Facebook, Instagram, WhatsApp. Their hiring practices over the last 3 or 4 years were not sustainable. And so I think a lot of this that's happening from a layoff standpoint is, you know, there's a lot of new positions, a lot more employees than potentially needed. Now, it's unfortunate for those who have been laid off, of course. But, you know, right now the job market's still pretty strong, even though the headlines, you know, tend to say a different story because of these big name companies. But, you know, if you go online and look for a job, or just go around town, there's still plenty of jobs. So if you're in that position where you're potentially, you know, see a layoff coming, you know, come talk to us. We'll develop a plan for you, kind of see where your 401k is, see what the best thing to do with it is. You know, do you have a pension? You know, there's a lot of factors that go into it. But hopefully here in Florida, right, there's not a lot of tech headquarters. I think a lot more of that is on the other coast. But if you have those issues or have those questions, give us a call.
Yeah, we do have a few clients that have gone through that, but for the most part, Florida, we are kind of an influx state right now, and we've had really good employment, and we've really kind of an influx state. So we have people moving here all the time. So job opportunities are still great here. But yeah, it is a concern when you start seeing the headline companies start laying off a little bit, Mark.
Do you think it's a preview of what could happen in 2023? Because even though we're in a recession now, there's a lot of the quote unquote experts that say it's about to get a lot worse.
Our president says we're not in a recession.
Yeah, he also said COVID's over too.
Basically, it's kind of a shot across the bow that things are slowing down. You know, when the Fed has raised rates as rapidly as they have, when you kind of look at our last Fed raises over the last 20 years, they have never done it this rapidly. So they really had it on steroids this year. By the time we get through the end of this year, they should be done with all of their raising. So most of the expectations by the market and by the Fed guidance has us done with raises, maybe a quarter of a point in 23, and that's about it. So we should be over with this mess. So it should allow for the market and the bond markets and the stock markets to be able to rally after this point. But because of the rising, when you have, you know, back in May, we had a market that was so hot here in Florida that you could sell your house on a Friday. It would be sold by Sunday, and you'd have 6 different offers, and half of them would be cash.
Yep.
Well, that has changed. You know, now here in November, you put your house on the market, it'll sit for about 30 days, and you might get 1 or 2 offers, and they're below asking. So we're kind of back to the regular market cycle. Now your house is still selling for a good value. It's not like it's a bad market, but interest rates are at 7% now, where in December they were 3.5%. So if you want to talk about inflationary pressures, you're talking about over 100% increase in costs. So someone who was borrowing a house, you know, borrowing for a house back in December, it was about $2,800 a month for a mortgage with your escrow. And that same mortgage, $500,000 now, is about $4,200 a month including escrow. So you're talking about almost, $1,500 more a month. So what are you going to do? You drop off a garage, you drop off a pool, what can you do? But if you need a 4-bedroom, you still need a 4-bedroom. So sometimes it's hard. It pushes some of the younger buyers out of the market.
Drop off a kid or two. Do not do that.
Yeah. 321-425-8550 to reach out to Art McPherson, Luke McCarty, and the entire team at the McPherson Financial Group. And Art, as we've been talking about this weekend, interest rates raised another 75 basis points. The numbers came out earlier this week. Inflation still at record high numbers. I thought that the point of raising those interest rates were to curb the record high inflation, but nothing seems to be working. So this just feels like the new normal. How do we protect ourselves?
You're going to have to deal with higher increased costs, so one way that you can help yourself is if you are doing a project or you want to do a project and you want to finance something, maybe you delay the project. Don't do it right now when rates are high, because there's a high probability in a couple of years things will slow back down and then the Fed will be able to lower rates again. So don't do a project at 7% financing if you don't have to. That's one thing you can do for right now. But then take advantage of what you can do. So if you've got some debt, you've got some expenses, and you've seen some expenses on your credit cards, things like that, pay those things down, pay those things off, take advantage of having a job, take advantage of having good resources right now, and just try to thin your expenses a little bit. So if it takes going out a little bit less each month, maybe a dinner or two you cut out of the budget, do it so you can pay some of that debt down, so that way you can keep your expenses low.
Yeah, I agree with that. As we just kind of talked about layoffs, right? Now's a good time to say, okay, I'm thankful I have a job, right? Things are still hopefully good in your life, in your household, and kind of reassess your situation, reassess your debt, reassess, what your contributions are, what your savings rates are. There's a lot of different things you can do now with the market down. I mean, the average 401k is down, call it 20-25%. Well, don't stop contributing, right? Keep going. If you have it in the budget to do more, you should continue. But now's a really good time to reassess things and kind of get out of debt, get you in a better position, build your emergency fund, and kind of get you in a better spot in case something bad were to happen to you or your family from the job front.
And one thing that you can actually do, so I'm not sure people listening today, but if you've got $10,000, $15,000, $20,000 of credit card expenses and you're paying over $1,000 a month on those expenses, you may want to look at your 401k. You can do a 401k loan. We don't want to take a distribution. If you do a distribution, everything is taxable, but you can do a 401k loan. You can do it out for a 5-year period, and you may find that it only costs you $400 or $500 a month to pay off a credit card that's costing you $1,000 a month. So take a look at that. It's a good opportunity. You don't want to use that as a solution all the time, but it is something that is a non-taxable event. You could do it, and if you've got high interest rates out there that's you're paying 14% or more on, definitely get those off the table so you can use that cash flow so you can have a better budget.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.